Welcome to Financial Literacy, your go-to channel for understanding complex financial terms and systems. We're here to untangle the intricate web of finance, making it more accessible, more understandable, and most importantly, more empowering for you. Today, we're addressing an intriguing topic that has sparked countless debates across the globe: tax havens, often seen as the playgrounds of the rich. Tax havens remain elusive and inaccessible to many, particularly those in the lower income brackets. But why is this the case? What barriers prevent the less wealthy from taking advantage of these financial sanctuaries? Over the next several minutes, we'll explore the world of tax havens, their allure, and the stark reality of why they remain a distant dream for the less privileged. So buckle up and prepare for a journey into the hidden corners of global finance. Stick around as we delve into the fascinating world of tax havens and reveal why they remain a distant dream. For the less privileged to understand why tax havens are out of reach for the poor, we first need to understand what tax havens are. Tax havens, in the simplest of terms, are countries or jurisdictions that offer low tax rates or even no taxes at all to foreign investors. They are typically characterized by high levels of secrecy and a lack of transparency in their financial operations. These features make tax havens particularly attractive to wealthy individuals and corporations who are looking to reduce their tax liabilities. But why would someone want to stash their money in a tax haven? Well, the answer to that lies in the allure of tax savings. Imagine being a billionaire with a net income that is taxed at, say, 30%. That's a hefty sum leaving your pocket. Now, picture a tax haven with a tax rate of just 5% or even 0%. The savings are substantial, aren't they? Moreover, tax havens are not just about low taxes. They also offer confidentiality, which can be appealing for those who prefer to keep their financial affairs private. This is particularly true for corporations that want to keep their business strategies secret from competitors and regulators. However, it's not all rosy. The use of tax havens can involve complex legal structures such as shell companies and trusts. The setup of these structures often requires the expertise of accountants, lawyers, and financial advisors, all of whom come with their own set of fees. Additionally, moving money across borders isn't as simple as transferring from one bank account to another. It involves navigating through a maze of international laws and regulations, which can be daunting even for the most seasoned of financial experts. So while tax havens might seem like an attractive proposition, they come with their own set of challenges. They are not just about saving taxes, but also about maintaining secrecy. Navigating legal complexities and managing the risks associated with these activities. Tax havens, while attractive, are not as easy to utilize as one might think. Let's find out why. Since tax havens are not your everyday savings account, they come with their own set of costs. Firstly, let's talk about the startup costs to establish a shell corporation or a trust in a tax haven. One needs to pay substantial fees to financial advisors, lawyers, and accountants. These professionals are essential to navigate the complex legal and financial landscape of these jurisdictions. For the average person, these costs can be prohibitive, running into thousands, if not tens of thousands of dollars. Next, there are the ongoing costs. Maintaining an offshore account isn't a one-time expense. You'll need to regularly pay these professionals to ensure that your accounts are in order, that you're complying with the ever-changing laws and regulations, and that your assets are protected. This is not a game for those with shallow pockets. Furthermore, there's the cost of transferring money in and out of these accounts. These transactions often attract higher fees than regular banking transactions, and if you need to convert currencies, you'll likely face additional costs there too. And let's not forget the potential cost of getting caught. If authorities discover that you've been improperly using a tax haven to avoid taxes, you could face hefty fines, penalties, or even jail time. This risk may be worth it for the super rich who stand to save millions or even billions in taxes. But for the average person, the potential savings would be far outweighed by the potential costs. So when we pull back the curtain, we see that tax havens aren't just about sunny beaches and zero taxes. They're about high startup costs, ongoing fees, and potential legal risks. And these financial and legal barriers make tax havens almost inaccessible for the poor and even the middle class. So the financial barrier is one reason why the poor can't use tax havens. What else? It's not just about the money. There are legal and regulatory hurdles, too. Let's delve into the labyrinth of legalities and regulations surrounding tax havens. The first thing to understand is that tax havens are not illegal per se. However, the complexity begins when you try to use them. To start with, you need to set up an offshore company or trust. This isn't a simple process. It requires a deep understanding of international business laws, something that most common folk lack. Moreover, there's a web of regulations to navigate. Each tax haven has its own set of rules. Furthermore, the laws of your home country also come into play. For instance, some countries have strict rules about reporting offshore income. Others have treaties with tax havens that can complicate matters. These layers of complexity demand a high level of legal expertise, and legal expertise doesn't come cheap. It's not uncommon for the legal fees to run into tens of thousands of dollars. That's a hefty sum for anyone, let alone someone struggling to make ends meet. Then there's the matter of ongoing compliance. Once you've set up your offshore entity, you need to ensure you're following all the rules. This includes filing specific documents, maintaining proper records, and meeting various reporting requirements. All this requires time, effort and, yes, more money. Let's not forget the potential legal risks. If you don't comply with all the regulations, you could face severe penalties. In some cases, you could even face criminal charges. The stakes are high and the margin for error is thin. In short, using a tax haven isn't as simple as stashing your money in a foreign bank account. It's a complex, costly and risky endeavor. It demands a level of knowledge, resources and risk tolerance that most people simply don't have. So while tax havens might seem like a golden ticket to the wealthy, they're a distant dream for the average person. The legal and regulatory challenges create a barrier that only the rich and resourceful can surmount. As we have seen, tax havens are not just about money, but also about navigating complex legal terrains. And then there's the question of ethics. This is perhaps one of the most significant factors when discussing the use of tax havens. It's not just about their legality or their cost, but also about their moral implications. The ethics or lack thereof surrounding tax havens can make them a contentious topic, and this can dissuade many, especially those less privileged, from engaging in such practices. Now, let's take a moment to reflect on what this means when a person or corporation uses a tax haven. They're essentially avoiding paying their fair share of taxes in their home country. That money, which could have been used to fund public services like schools, hospitals, or infrastructure, is instead tucked away in an offshore account. In a way, it's a form of financial privilege, one that is largely inaccessible to those who are less well off. For many, this raises a moral question. Is it right for the wealthy to avoid paying taxes while the less privileged bear the brunt of the tax burden? This is a question that each individual must answer for themselves, but it's worth noting that for many, the answer is a resounding no. This ethical quandary can deter the less privileged from using tax havens. They may feel that it is morally wrong to avoid paying taxes, especially when those taxes could be used to support their communities. They may also fear the social stigma associated with tax evasion, which can be particularly damaging for those who are already marginalized. Moreover, the ethical implications of tax havens can have broader societal impacts. When the wealthy avoid paying taxes, it can exacerbate income inequality and social divisions. This, in turn, can lead to social unrest and instability, creating a vicious cycle that is hard to break. In conclusion, the ethical considerations surrounding tax havens are complex and multifaceted. They involve not just personal morality, but also social responsibility and the broader impacts on society. So while tax havens may offer financial benefits, they also pose ethical dilemmas. So there you have it. We've taken a deep dive into the world of tax havens, shedding light on what they are, their costs, the legal and regulatory challenges they present, and the ethical considerations they entail. It's clear that tax havens are not just about stashing away wealth. They're complex systems that require legal and financial expertise, resources, and a certain level of risk tolerance, making them largely inaccessible to the average person. We've seen how the scales of financial privilege are tipped, creating a divide between those who can afford to leverage tax havens and those who can't. It's a sobering reminder of why financial literacy is so important. By understanding these systems, we can advocate for fairer, more inclusive financial practices. Thank you for tuning in to Financial Literacy. Don't forget to subscribe for more insights into the world of finance. Until next time, keep learning and striving for financial wisdom.